Hi, everybody. My name is Zahira Fayyaz. I'm the Regional Sales Manager for MFS, and I look after the Southeast and Midlands region. And yeah, just excited to speak to you guys today in regards to where bridging finance, what bridging finance is, what we expect, what's going to happen in the market, and where we can support you. And I think in line with, New Year's resolutions, we've got our 2023 resolutions. So looking to get into shape when it comes to fast, flexible finance. New year, new clients. And in terms of the property market, it's the same property, but we're just looking at different ways of how we can provide funding solutions for you guys and your clients. And I think a big initiative moving forward for 2023 and the years to follow is the Go Green initiative when it comes to EPCs and regulatory deadlines and so forth. So just a little bit about MFS in terms of what we do. We are a bespoke bridging lender and buy-to-let lender. We have been around for over 15 years. And for us, it's all about providing bespoke, truly specialist service to our brokers and our clients. We don't have a one-size-fits-all kind of premise. It's very much a human-based approach. And I think that's so necessary, especially in the current economic climate, because everything is kind of in an uncertain world, let's say. So you need to be able to provide funding solutions in that time. So moving on from that, one thing we're very, very good at is we have a 4-hour response time and direct access to underwriters and BDM. You always have 2 people available on any deal. So yeah, so we've got offices in London and Singapore, and what that essentially means is we've got round the clock processing. So when it comes to any deals or anything that you guys want to discuss, it's not a time frame constraint. You can send any deals to me or any members of my team at MFS, and we can get back to you. So Jamie actually mentioned a really good point in regards to understanding your lenders and understanding how they're set up when it comes to funding and how they're set up. So we have very, very strong funding strength. We're backed by several international UK institutions alongside in-house funds. MFS have a very liquid position in the market in terms of where we can support clients, and that is what allows us to be a lot more flexible, because we're a solution-led company. So where we've got the funding to support that solution-led mindset, it allows us to give you a decision pretty much upfront within 24 hours of information, credit-backed terms, and giving you and your clients much better service in regards to moving forward with the transaction and supporting them in their cash flow. I think one thing that's very, very important, and I think this is an industry market perspective, is the willingness to lend. If you are an established broker, you would have seen that a lot of lenders would have kind of pulled out in the market or kind of paused on their lending, so to speak, especially within the last 6 months. So that put people in a more precarious situation, a more uncertain position, and it was kind of a bit of a panic-driven market where we're trying to get funding, especially if there's tight deadlines involved. So this is something that MFS is very, very keen to let the market know in terms of willingness. But also I think just generally from a market perspective, you should understand the position of where the lenders are. I just think be candid, ask your BDMs what's your position in terms of lending, what's your appetite to lend. It sounds like a big question, but it's very, very important. And I think that merits a lot of caveats right at the onset. So I think that's something very important that you should be asking. And if you're a new broker to the market, this is still something you should be able to ask your lenders, because at the end of the day, you will be letting your clients know what kind of deliverability you can provide in terms of service. And I think as well, one thing that's very important to us is speed. And, this is something that most bridging lenders will speak about, but, for us, we can deliver within as little as 3 days. So we will talk about that in terms of the market perspective later on. So I think everybody's got questions in terms of where the market is going. Jamie's presentation was fantastic, and I learned a lot of it as well. But I think forwarding on from that, I think what we want to kind of talk about is where we see the market going in terms of property and real estate. So we've seen average house prices in the Midlands generally increased, but they've seen the largest at 7.3%. So the continuation of a strong growth is still prevalent. We do see in the news right now, average house prices dropping, but you will have certain areas and certain hotspots and micro climates, economic climates, where you're going to see growth. So we've seen the UK average house price seen an annual change of about 2% between December 2021 and 2022 to about just over 281,000. So I think that figure is important if you're looking at it from a market perspective in terms of, yes, we've seen correction starting to come down in the market in the last 6 months. But if you take it from an annual perspective, there's still growth. And yes, there will be areas that will see a dramatic correction in their climates. And I think where you are based, especially from a broker-based perspective, you will understand your own locations, your own regions much better. But there will be hotspots delivering growth, and I think that's where bridging finance can really support, because even if there is a correction happening, bridging finance can still be that solution, because at the end of the day we will merit the deal based on what we expect it to come through at. So it's not necessarily a negative, but it just means that we can provide the solution so that in the long term, where the market is going to start going back up, say from 2024 onwards, the client is still not at a loss, essentially, because bridging finance is not, yes, it's a short-term solution. It's a short-term solution to a long-term goal. And that is what I think we're trying to educate everybody on, in terms of why it is such a feasible product and a solution in this current climate. We've also seen the balance between purchases and remortgages shift. So it's now 52 to 48 in terms of purchase acquisitions and remortgaging and refinancing. I think that really reflects the trend of where the market is going, where especially if you have buy-to-let landlords, investment professionals, portfolio landlords, having a shift in terms of not necessarily buying new properties, but just refinancing their current portfolio, or even exiting, because obviously things have changed in terms of interest rates and prices in the market. So that is going to be where I see the shift happening, and where bridging can support that is where you need to refinance, and not necessarily if your clients feel that, and you feel that the market might change in 2024, that 12-month solution or 18-month solution is going to be there to support them in refinancing their products, getting, at least securing their portfolio, leveraging, balancing their leverage in terms of their portfolio, and then exiting onto more cheaper rates, let's say like lower interest rates in the market moving forward. What we've seen as well is from Halifax Price Index, just some data that, and other various reports that have come out, that the mortgage market as a whole is looking to bring down their rates from 6% down to 5%. So that we've already started to see the shift coming down slightly. So if that's the pattern it moves forward, with base rate and inflation leveling out as well, you're going to want to use a solution where you don't necessarily want to lose the property or your asset, you just want to secure it, and then decide to move forward with them once the market changes. So we've also seen it's forecasted that residential values in the UK are still going to increase by 6.5%. That is going to be including London, so that will have a big factor. But I think regionally as well, especially in a market where there's a lot of foreign investment, you will still see uplift in properties prices in the Midlands, so like Birmingham, East Midlands, in the north as well, Manchester, Newcastle. I'm just giving examples, but you will have hotspots in your regions where there will be growth. So there is still an appetite to purchase. So that's where bridging finance can really support. And I think overall, what's an interesting thing that has changed in 2022 is commercial coming back from obviously post-COVID lockdown days. Commercial took a massive hit in terms of finance and just generally, because obviously it just wasn't there. Now we're starting to see that people are coming back to the offices. Oxford Street is definitely going to have more, it's going to shift more towards commercial units rather than just retail. We've already started to see that. It's expected about £50 billion worth of commercial investment by the end of December 2022. That's from a Savills report. So, I think what we're seeing is a massive shift. So in terms of commercial coming back, and I think there's going to be a strong growth in that area of finance, especially in property. And I think it's going to be very lucrative when it comes to maybe people deciding what they want to do in terms of their business life cycles, their business portfolios. It's not just it might be a blend between residential and commercial, and yeah, just things moving in that direction. So in terms of our predictions, what we will say is our latest report shows that there's optimism, as I said, for mortgage rates. I mentioned that we're expected to see mortgage rates fall from an average of 6% down to 5% in 2023. That will have a knock-on effect when it comes to entrants and exits in the market. You know, I don't think we're going to see as many entries into the market as we did see during the COVID time, but we are going to start to see a fall, which will allow landlords and professionals and just general property people buying property just some more liquidity in their actual financial positions. I think as well, rental prices are going to increase. That's definitely happening, and that's had a knock-on effect in the buy-to-let sector. But what it is in terms of rental income, the number of people looking to rent a home is 142% higher than it was a decade ago, and this trend could continue. So essentially, it's a supply and demand conversation. You know, we don't still have enough supply. There is still a huge demand, and that's where bridging finance can really help, because we can allow clients to purchase their properties quickly, get moving quickly, allow them to refurb and get those properties onto the market. So in terms of demand, the property market as a general is still very strong in the UK, because we just don't have enough stock, essentially. And I think another thing that's really, really important that I mentioned earlier is going greener. So 62% of UK households are considering energy investment homes as an attractive option for investment, because, you know, let's face it, in real time, in today, as we speak, cost of living crisis is affecting so many people, millions of people. It's affecting all ends of the spectrum, whether, you know, you're more working class to your middle class, and it's having a knock-on effect on everybody, purely based on the fact that, you know, everything is so expensive. And, you know, going greener is an initiative that the UK has. And in terms of EPC ratings, you know, we need to, you know, landlords need to be more, they're becoming more mindful of being in line with regulations by 2025, where it has to be a minimum rating of C or above. So right now, what we understand is currently a lot of them in the UK sit in the band D. So that's from 2022 data. So if you've got landlords and clients sitting in with their properties in band D, they have essentially up until 2025 to get that changed. Now that will require refurb works, that will require capital to go into the properties, that will require sometimes vacant possession if they need to bring that property up to standard. But also, if it's from an acquisition perspective, not a refinance perspective, you know, these guys will want to spend money to get the building fit for purpose, because this is something that is regulatory happening in 2025, and it's very, very important. But just if we switch it from the market perspective, from a buyer's perspective or a renter's perspective, you know, people are a lot more conscientious of making sure that their carbon footprint is lower, you know, that they're doing things in line where, you know, cost of energy is not going to be so expensive when they're purchasing, because this is having a massive effect right now, and nobody really understands how long it will last. So it's a sustainable question. It's about sustainability, but it's also about making smart decisions when it comes to doing your purchasing and refinancing portfolios. And I think finally, one thing we are going to see as well from the kind of weaker sterling when it comes to kind of the more macroeconomic question is, with a weaker sterling, we're going to start to see a lot more foreign investment from abroad into the UK market because of the favourable interest rates, where their cost of capital goes a lot further with the weaker pound. So the thing with bridging finance, and I think this is really key, is if you do have clients who are foreign nationals and they don't have any UK footprint, they're looking to purchase in the UK, then, you know, bridging finance can provide that solution very quickly in as little as 10 days if needs be, with no UK footprint, you know, and we can get them the acquisition. and holding on to the property allows them to establish a UK footprint, so that once they have an established portfolio footprint in the UK, it then allows them to refinance on to whatever they need to go, or whatever they wish to do, whether they wish to refinance or sell. But it's very, very important, because cash buyers, people want to still, the UK is still a hub. I would say it's one of the most important property hubs from a global perspective. It's a market that it's essentially one of our biggest kind of markets from an economic perspective, but it's something that is here to stay. And irrespective of what's happening, you will always see investment in the UK from a domestic product, but also from an external foreign nationals perspective. So for brokers new to the specialist market, or all those with year experience, we offer a wide range of brilliant products, and we can support them with speed. So I think one thing is we underwrite all our deals up front, so decisions are made very, very quickly, and there's no red tape, no bureaucracy with, say, your more traditional high street lenders. This is where specialist finance as a whole is very, very important to clients, because I think Jamie mentioned as well, just want to follow it, bridging is seen as a negative word, and it's kind of seen as expensive. It's seen as, something that sometimes people are afraid of. And I think from an educational perspective, it's a short-term solution, but equally it's something that any business, whether it's, whether you're running restaurants, whether you're running, fashion houses or something, every business has some form of finance that allows them to, be flexible when it comes to their working capital. Bridging finance is basically the same model, but for property. So property is done, it is just a different kind of business model, essentially. So when you think of bridging finance, it's essentially a cash flow solution to allow clients to do what they need to do, and it's up to 12 months. But equally, from a long-term perspective, it's what allows them to make quick decisions, to move their business, to move their models quickly. So I think that's really, really important to look at it from a wider perspective. And in terms of flexibility, we've got no early repayment charges or exit fees on our bridging finance after 3 months. So it just means that the client isn't necessarily tied in even for a 12 or 18-month period. They can, if we take an example, if they need to purchase something quite quickly, notice has been served and they need to move, we can do the bridging finance, get them the property, and then they decide, actually we want to move on to a buy-to-let product, for argument's sake. Well, after 3 months, there's no problem to do that. They can move and it hasn't essentially been as expensive as they thought that it's going to be. Another thing as well, which is what's really important, is our bespoke kind of approach to finance. So we can roll up or defer interest, we can tailor our approaches. I think what's moving forward as well, it's about a tailored approach to your client's funding needs. So we're very conscientious of requirements, timeframes, financial incomes. So obviously when we're looking at a transaction, when we're looking at a deal, it's going to be underwritten, but more holistically, rather than a kind of computer says no model, which I think in the last 6 months in particular, a lot of people have been kind of caveating their underwriting at. So I think that's something that we do thrive on, not to go too much into what we do, but I think what it is where it's an uncertain market, you want to be able to get solutions that allow your clients to get what they need. But as from a broker perspective, you've provided that service, knowing you've gone to a lender that can provide a solution right from the onset, not at the latter end where things might decide to change massively. And it just makes it much more streamlined. But I think as well, it changes the narrative, which is so important in bridging finance. Changes the narrative that bridging finance is just, oh, it's expensive money or anything. No, it's the fact that we've allowed the client to do something where they might not necessarily have been able to do a year ago or with their traditional lenders. We've provided that solution, we've given it to them quickly, and it's also taken away a lot of anxiety and stress, which, to be fair, right now, you wake up, before you've even had your cup of tea or your coffee, that you've already been bombarded with 110, 10 different bad stories, or this is going on. And I think it's just about allowing people to understand that it's a positive support in this current climate. And I think finally, optionality, we have a wide range of products, which basically feeds into the bespoke kind of way we do business. And bespoke kind of way, Bridging Finance supports clients from all different types of professional backgrounds, and whether you're domestic clients or foreign nationals. I think it's a good way for them to understand that, yes, there is definitely a market where, if I need to do something, I've got the capability to do it, and we can do it quickly, and we can do it as stress-free as possible. So what makes MFS stand out, without going into too much detail? As mentioned, we don't require a UK footprint. We're experts in terms of, foreign nationals and complex cases. MFS just had a press release that we've secured over 1.5 billion worth of lending against assets, and we're writing up to nearly 1 billion. So I think it just shows the strength of what we've achieved, but also the strength of our funding lines, the strength of our liquidity and our position, and also the strength where we can support clients in delivering bridging finance and when they need it. We can get funds within a list of 3 days. When we say yes, we mean it. Now, this, I think, from a market perspective, is very, very important, because there are many, many lenders in the market who will say, yeah, we can do this. We can then, you send the deal over as a broker. You go through, all of the kind of shopping list of information when it comes to it. Everything looks fantastic. Go back to the client, things happen. And then eventually, later, after the valuation, after certain things, it actually then goes to credit. And then the deal changes at the latter end. And that then has a massive knock-on effect when it comes to your position and the client's position, because then you're in a situation where, let's say, the loans change by 20% in terms of loan metrics from gross loan to net loan. The client then has to find that money at the latter end, and that has a massive effect, especially when you've got a tight deadline, or you've made commitments, or they're equity partners, JV partners. It has a knock-on effect in the whole business. So I think, when, as a lender, if you have a lender that when they say yes, I'm asking you for XYZ information right on the onset, you have an underwriter working with you, you have a BDM working with you, but it just means that we can provide that solution. The deal's not going to change later on down the line, and it gives you that confidence to know that the lender is going to come through when it comes to the actual decision. And I think this is important, not just for MFS, but anyone. If you're doing business with lenders, understand their process, understand how they do business. Some people like the fact that, we underwrite everything up front, we get all the information, because do you know what? It gives them transparency, it gives them confidence that, okay, at least I know the deal's being done on this merit. Some people don't like it if it's just a question of, we just want to understand rates, for argument's sake, which, to be fair, a lot of the time it is. You say this rates, and then you go to that lender, and then it turns out to be different. It changes the service that you're providing your clients, but it changes the relationship you have with your lenders. And I think that's very, very important. So, these things do have a knock-on effect. And I think it's important as a broker and an intermediary network to understand that, and also have that confidence in the lender to say, okay, you know what, whether that's a small deal or a 50 million pound deal, with MFS, our process remains the same, and it's the same level of service we provide. So I think that's very, very important. And it just feeds into the next point of underwriting from day one for transparency. And when it comes to transparency, what we mean is, because we can take a view when it comes to clients who may have, like, say, adverse issues in the background, there could be negative press, there could be complex structures like BVIs or offshore trusts and things like that. Once we understand what the client's position, what they need to do, and what the solution is, we underwrite that from day one, and we can then give you a decision if we're good to go. And that will alleviate so much time and so much stress. For essentially, in our world, time is money. If you understand that from day one, you've just offset so much of that, and it just makes the process a lot more streamlined. And finally, I want to say as well, we are always looking for a reason to lend. We're very liquid as a lender. We've had a press release that's, we're shouting about, and I think it's really important to be shouting about, because I think this is about confidence and deliverability. It's about being able to provide that deliverability and those solutions for your clients, no matter how complex, how difficult, what adverse, or how easy it is. Either way, and it's about deliverability. We want to be able to, show that we've never ever stopped lending. We've, even during COVID, pandemic, any issues in the last 15 years, MFS has always lent. And I think that in itself speaks volumes when it comes to, what 2023 is looking like, because it is a difficult market at the moment. Interest rates are still generally higher than what it was a year ago. And I think the market has changed. Some people will remember there was a time where interest rates were in double digits. That's something that might be on the horizon. It might not be, but we are expecting things to go down. But my point is the market has fundamentally changed, and you want to be able to have confidence in your lender that they can support you no matter what kind of peaks and troughs the market is going through. So just a quick, just wanted to run through some examples. I am conscious of time, so I'm going to move quite quickly in this. But an example of moving quickly to fund an auction bid and providing time for future planning. Jamie mentioned the difference in planning and PDs. Auction finance is very much one of those products where whatever the clients decide to do, whether they want to, get planning on board or they want to go down the PD route. But the client had purchased a commercial asset at auction and was facing a tight deadline. It was run down and needed refurb works, and we needed to give them additional capital as well to cover remedial work. We worked very closely with the valuer to generate a full schedule of works. We allowed them to increase the loan to value to correct the funding for the works, which would increase the property's value overall. And as we said, we underwrote from day one. And because we had several funding lines, we managed to do that very, very quickly. And it was 70% loan to value for 115 and the property value at 165. So I think this is just a general example of where we can provide a quick solution, give them what they need and move quickly. So bridging loans, whether it's, as I mentioned, an auction finance, we all can also do things like we've got a case study where we had a client who's investing in multiple apartments with tenants already in place. So that already becomes a difficult metric to get over. Loan amount we did was just shy of $1 million loan amount was 952,000. And it was a 70% loan to value, but we managed to get the funding in place to ensure that, the client still didn't have to go through several different loopholes to lose the property. We also had a client who's issuing funding to a company for investment in a residential asset, 68% loan to value, 3.95 million loan, value of the property, £1.5 million loan amount. And where it was a issue with the funding in terms of the structure, we were allowed them to get the asset irrespective of the trust or the structure. So for us, it's about being committed to our clients and not stopping lending. I think structure in this scenario, what I'd like to touch upon is more, if you have clients who've got complex structures like BVIs and things like that, or trusts or Jersey or, kind of tax havens, we can look at it. So it just means that there's an issue when it comes to what the profile of the client looks like. And equally, from an asset perspective, we can take a view on complex assets, whether you've got tenants in place in situ or you've got, planning changes or things like that. We as a lender can take a view, and we are looking for opportunities to lend. It's a very specialist and bespoke way of looking at it. So these are the kind of products that we do. You can have a review of it. And also, if you do want to have our presentation, do let me know and be happy to send that out to you. So we've got that in place as well. I think overall, the industry is changing rapidly and education is key. And I think as well about changing the narrative. So yeah, if you want to scan the barcode, by all means, you'll get the information with all our blogs, our property market information and our research. And I think that will be really, really important for brokers just to keep on top of what's going in the market and having direct access to research from lenders in today's climate. And I think that's it. I think my time is done. Is that right?
Yes, it is. Thank you so much. Sorry, I didn't want to rush you at the end there.